In his inauguration address, Trump promised that American decline stops today. That's a quote. And that America was now primed to enter a golden age. He uses the word gold a lot for a guy who's not using a gold standard.
Welcome to the Morning Markets and Metals with Vince Lanci, where each morning Vince brings you the financial and precious metals news to get you ready for your day. And now, here's Vince.
Good morning, everyone. I'm Vince Lanci, and it's Tuesday. We have a lot of ground to cover today. Most of it is about Donald Trump. It is, however, very material to current events, to his intermediate policies, and to the markets themselves. The first thing, in no particular order, but we're going to try and keep it organized. We're going to cover his rhetoric, what he said versus his written memos, and the differentials between them. We actually have more on that from Goldman Sachs at the bottom, but we're going to touch on that in our own conversation. We're also going to do an overview of the substance of what he said and did. And that would be his policies, his executive orders, and what he added and what he subtracted from the Biden administration. And third, we want to go through the tariff effect on markets through the lens of manufacturing and mercantilism and what it means for gold. Most of the market behavior is going to be branching off from whatever the dollar does for a long time. Let's get started. Four markets up top there, clockwise from top right. That's silver, gold. I'm sorry, counterclockwise. Silver, gold, the 10-year yield, and the dollar. So silver, starting at the 17th, right, Friday, is slightly higher. I'll help you out with that. There's a 17th. That's an hourly chart. Silver is slightly higher. Gold is more higher. 10-year yields are lower, and the dollar is significantly lower, although it has bounced pretty strongly off its lows. Okay? Those markets tell you the tale of his policy, aside from stocks, which are unchanged. Stocks have not figured out what they want to do yet. So you can look at those and think about those, but everything is reacting to the dollar. The dollar is driving everything right now. Okay, 10-year yields are down for the dollar. 10-year, the DXY is 108.69, up 62 after dropping a boatload yesterday. The S&P 500 is 60.21, up a little bit. The VIX is 15.77. That's also very weak, relatively speaking. Gold is 27.27, up $20, $21 on its highs almost of the session. Silver is 30.61, up 15. Copper is 4.27, down 1, almost 2 cents. Incidentally, Goldman thinks there's too much tariff risk baked into the price of copper, so they're bearish on copper in that respect. And not enough is baked into gold. So you can figure out what they think about silver. WTI 76.71, down 77. Natural gas 3.82, down 3 cents. Bitcoin 104,413. Volatile up 2,000 this morning. Palladium 937, unchanged offered. Platinum 942, unchanged offered. Gold, silver steady at 89. Soybeans, corn, and wheat. Soybeans 1050, up 18. This has got to be Trump policy related, I would think. Corn is up 3, almost 4, and wheat is up almost 8 cents. Okay, so there's the markets. Again, it's about the dollar. The dollar is going to immediately discount what he's saying before everything else. And let's take a look at what those. So there we are, manufacturing American greatness. That was written in sincerity, but I'm not unaware of the irony that it also entails. Discussion, Trump's inauguration, premium, Trump's tone or tariff tone, as Goldman believed to be true. Homepage, we were not doing morning broadcast for the last two business days, but we were very busy writing, and you could see some of those stories there, one of them which went out this morning already. Discussion, Trump's inauguration, topics within some things that we'd like to say right now, if you don't mind. National security, border emergency, and immigration crackdown, market reaction. Initial optimism meets rapid recalibration. These aren't our titles, and they're not AI titles either. Uh, Energy policy, drill baby drill is back. All right, that's my title. Tariffs as tax cuts reshaping American trade. American nationalism, prioritizing real production, and Besant's comments on manufacturing. Okay, uh, let's start. I'm paraphrasing some things by Ben Picton from Rabobank. He said some good things today. All right, so here we go. You would need to be living under a rock, right? Not to know that Donald Trump was inaugurated as the 47th president of the United States yesterday. In his inauguration address, Trump promised that American decline stops today. That's a quote. And that America was now primed to enter a golden age. He uses the word gold a lot for a guy who's not using a gold standard. Anyway, in terms of substantive plans, Trump pledged to declare a national emergency on the southern border to mobilize law enforcement and designate drug cartels as foreign terrorist organizations. I think we're going to do that. He can do that because Mexico's probably going to want him to do that. Use powers under the 1798 Alien Enemies Act to begin detaining and deporting illegal immigrants. The act has only previously been used in times of war. War of 1812, World War I, World War II, which we're in a war right now. It's just not being labeled as such. All right. The inauguration and the accompanying executive orders initially appeared to have limited market impact. But that's because most of those markets were closed for the Martin Luther King holiday. Early price action suggested complacency as traders bid up risk currencies, sold the dollar, and bought European equities and treasuries, causing 10-year yields to fall 8 basis points on the open. Now, the dollar essentially crapped out, right? And that was because the vibe that professionals were getting from this was, oh, he really isn't going to do a universal tariff. That's it. Everything else is derivative of that. All right. But that reversed when headlines suggested the new administration might impose tariffs on Mexico and Canada as early as February 1, sending risk currencies plummeting and reversing bond retracement. Overnight, Trump signed executive orders directing federal agencies to examine trade policies with China, Canada, and Mexico, commenting, "We're not ready for that yet," regarding his proposed 10% universal tariff. Although the actual imposition of tariffs will follow a time plus X basis, the X appears increasingly small. Okay, so in short order, his tone and the reinterpretation by the markets of something that his Secretary of Treasury Besant had said and was put in a Wall Street Journal article, raising awareness, something Zero Hedge noted as well first, or among the first, was that Besant and his like, of which I would call myself his like, knows that we can't have a strong dollar and rebuild. We need a weaker dollar to do that. And I'll put that simply for you, since I've talked about this before. We're in a mercantile world now, right? And in mercantilism, you need to export more than you import. Most of you have heard this before. And in order to export more than you import, you need to have competitive manufacturing. You need to be the low-cost producer or make something that no one else has that everyone wants out of their minds. Well, we can't compete with China yet, right? We can't. We can't compete with most nations on earth for manufacturing yet. We don't have the lowest costs. We have a high standard of living. That means we have high wages. So while you're trying to rebuild manufacturing in a way that's more cost effective, in a way that sells goods that people want, you need to do the second thing, and that's weaken your currency. So if you can't compete at the literally at the manufacturing level, then you have to compete at the monetary level. So you basically mark your prices down. That's inflationary for citizens, for US citizens, not immediately, but it is. It just is. So to have a strong dollar is to compete with the internal work we want to do. So the weak dollar would facilitate would keep us from drowning while we're building internally. Bissett was very pointed on that in his conversations, not surrounding the presidency, but he said it before. All right. Um, where were we? All right. So that's the mercantilism thing. Okay. We need a weak dollar because we need to export and we need to have a protective moment so we can uh, rebuild our manufacturing. And that's why the dollar dove. And then it rallied hard again because Trump comes out and says, as early as February 1, Mexico and Canada, you're on deck. Okay. So the written words were, most of the written words were harsh. Boom. Okay. All the tariff written memos were harsh. But the interpretation was combined with his rhetoric at the inauguration, made everyone back off of tariff fears. And then he comes out later and says, you know what? We're going after Mexico and Canada. So I'm going to tie this all together in a planned sort of way. I'm Donald Trump, and I do want to change the world's perception of our of economic drivers. And China's the boss, meaning the big boss in the video game. He's going to say, we'll worry about China when we get to it, which means universal tariffs. We'll worry about this. He's going to go after the game, the fights he can win to build up momentum so that when he finally sits down with China, he can say, I've got this, this, and this in my pocket. That's how you do it. You convert people to your way. You show some wins, and then you go after the final boss. So he's probably not going to verbally be tough with China until he gets some wins under his belt with China. I'm sorry, with Mexico and Canada and whatever else. He's looking for wins now, not confrontation in fights that he might lose or might not win negotiation-wise. Okay. Trump also signed executive order to withdraw the United States from the Paris Climate Accord, right? And Joe Biden's Green New Deal policies, including electric vehicle mandates and key elements of the Inflation Reduction Act and CHIPS Act. These policies, which had spurred factory construction but created few jobs, are being replaced with a focus on cheap energy. Again, this is a Bissett thing, to revitalize manufacturing. We can get a lot more done with free oil domestically, right? And a weak dollar internationally to rebuild our manufacturing than anything else. All right. So Trump declared an energy national emergency as a result of this to expedite permitting and loosening export controls. However, analysis points out that the U.S. has some of the world's highest production break-evens, making government subsidies likely if expansion is pursued. So even though I have pushed back on this, he's probably going to have to permit more refineries to be built. Another blow to the green event. So he proclaimed, America will be a manufacturing nation once again. I believe that. And we have something that no other manufacturing nation will ever have, the largest amount of oil and gas of any country on earth. We will bring prices down, fill our strategic reserves to the top, and export American energy all over the world. Okay. You can't do both at the same time, but I know where he's coming from. Expect more rhetoric about tariffs as tax credits as well. Tariffs as tax credits. Now, it doesn't jibe with me as an economist, but I understand what he's saying as a populist president. For Americans, Trump announced plans to establish an external revenue service to oversee tariff collection. We will tariff and tax foreign countries to enrich our citizens. Massive amounts of money pouring into our treasury coming from foreign sources. Well, he's basically setting a collection agency out to get tariff money from other nations. That's not going to enrich us. That's just going to allow him to, if he's lucky, lower taxes domestically. I don't think he's going to be able to do that, but it's not to say I don't like the plan. Economists may debate whether the burden of tariffs ultimately falls on U.S. consumers, which is what I just alluded to, but the program aims to reverse, and this is key, whether it works or not, it will work, but it won't work in spades immediately. The aim of the program is to reverse decades of neoliberalism. In this sense, he's the opposite of Reagan, restoring production to the US and shifting focus from Pareto optimal free trade to mercantilism and great power competition. That's a quote from Rabobank. There you go. We're mainstream now. On housing, so moving on, right? Trump is using the tactics of Reagan and the economic policies of Reagan to reverse what Reagan did. Reagan took us from manufacturing to services. We needed to change. That was our reset in the late 70s. We don't make stuff anymore. We now do services. Now we're going to get rid of services and we're going to make stuff again because we need to. So he's essentially undoing neoliberalism. And, believe it or not, Reagan is the father of neoliberalism. It wasn't so bad in the beginning economically. How it de-evolved over time is what happened. All right. So on housing, Trump's executive orders direct reductions in housing costs by expanding supply. He's a real estate guy. He's a classic corporatist. Build, baby, build. Forget drill, baby, drill. It's build, baby, build. He's going to build his way out of the problem. And that's what manufacturing needs. Lowering health costs and eliminating counterproductive climate policies that raise food and fuel costs. Now, how's he going to lower health costs? Well, he's got to get rid of bureaucracy to do that. Eliminating unnecessary administrative expenses and rent-seeking practices. That's it, right? He's getting rid of bureaucratic middlemen. The emphasis on real, so classic corporatists. Classic corporatists hate people that don't do anything. They'll pick a union over a bureaucrat. That's the mindset. The emphasis on real production aims to sideline unnecessary transaction costs and shrink the state. Trump also emphasized reinvigorating military strength, replacing DEI initiatives with a focus on winning wars, reinstating service personnel dismissed over vaccine mandates, and vowing to take back the Panama Canal. All consistent with how a corporatist would do these things. Recent weeks have seen, for example, Trump demanding NATO allies spend up to 5% of GDP on defense, provoking accusations of an imperial tax. Whatever, okay? We have spent more money, taking his side on this, we have spent more money than Europe, and that's the deal we had. The deal was, we'll spend money on your missiles, and you abide by our economic policies. And now they're like, well, we don't want to spend money on missiles. They haven't been. And he's like, well, then you're on your own. And all those economic, that great welfare state that you had, able to absorb all these immigrants for years, not necessarily the last 6 months. Well, you're going to have to spend that money on your welfare state. You're going to have to spend it on missiles. So basically, he's exporting American ideology and changing Europe by doing this, hopefully. European objections highlight the material dominance of U.S. influence under Pax Americana. Well, it's not Pax Americana anymore. It's mercantilism. It's fragmentation. It's compartmentalization. It's you better take care of yourself. The dividing line was we protected Britain and the missiles were in Europe. Now the dividing line is going to move back and the missiles are going to be in Greenland if we have our way. All right. So there's more on that. I'll get to that in a second, but let's see where we. Okay, turning to gold and silver and commodities in general and the dollar. We'll put this up there. The tariffs, so focusing on the tariffs, right? The tariffs are bullish for US gold and silver, but not bullish for the rest of the world silver. And you're seeing that with the EFP and with the dislocation risk that we've talked about here. But here's what happens if you do that sort of a tariff. I'm not saying he's going to do it, but if you do that sort of a tariff on silver that comes into America, then the rest of the world's going to do it. See, if he does this tariff, he drives the price of commodities up anyway. because we are the dominant pricing power in commodities. So if we have a tariff, they're going to have a tariff because the price has got to be the same. So as the markets deglobalize financially, they reglobalize in terms of price, right? You're not arbitraging financial anymore. Oh, I'll buy it there and I'll sell it there. You're saying, well, I'll just take delivery here and I'll ship it to the US. And what ends up happening is the rest of the world's price goes up because you can't buy it from the US anymore. So the price of the metal goes up. So a universal tariff on silver would not be a good thing for the world. And especially if you're Trump and you don't want the price of silver and gold to go up too much. So replacing it with a weaker dollar does the same thing for silver and gold because it keeps our prices down compared to the rest of the world, and they buy it. So a weaker dollar drives the price of gold and silver up through external demand. Tariffs drive the price of silver and gold up through internal demand. So the price of silver and gold have to go up, and that's what you're seeing. So tactically speaking, the dollar, bottom line, the dollar has been strong forever. If I'm wrong and the dollar stays strong, then it's going to stay strong because we're probably going to be adding tariffs, which is going to make gold and silver go up in price, especially silver. If I'm right and he doesn't do universal tariffs, well, what's going to happen? The dollar is going to weaken because it would have to. It's either tariffs or a weak dollar to get manufacturing rebuilt again. If we have a weak dollar, gold and silver are going to go up. So when all is said and done, gold and silver have to go up, whether there's inflation or not, because the price suppression is going to end with economic policy. All right. And so that's why on a dollar dip, you may see gold and silver rally. And on a dollar rally, you may not see gold and silver get hit too much. It's a new era for the metals. Here are some of the stories we put out over the last 3 days. Silver EFPs, the canary in the coal mine, canary in the silver mine, I should say. Private walkthrough of the BOA silver report. We just put that out yesterday. That's a follow-up. Mali seizes 3 tons of Barrick gold as tensions escalate. Well, that's because no one's exporting their natural resources anymore without a price. Everyone's raising the prices to get access to the natural resources, which is what tariffs are. Hartnett bond downside is done. Here's what's next. He believes bonds are going back up. I think his comments really are about, if you want to read more about the Trump next 300 days, next 200 days, Hartnett is the one to put focus on because he thinks if Trump doesn't get done what he wants to get done, all right, then the dollar is just going to get weaker, right? That's what he's saying. And he actually says sell oil and buy gold. And I think he's saying it because we're going to drill, baby, drill. Clandestine geopolitics and trading algos. Special guest trader Sumo. He's an algorithmic trader with an NSA background. Really fun conversation discussing things from, regime change in foreign countries, CIA operations, and what have you. It's a person who has NSA experience. Right? Goldfix Weekly, the Trump Hartnett Flow Show. I just basically put Trump and Hartnett together and said, you know what? They're both, one is predicting the other. Founders AM, this went out yesterday. One of Goldman Sachs's traders off of their institutional desk inferred that China's whale is the one buying again, which is what we've been saying for the last week or so. Since China bought at the 100-day moving average and it was bought again at the 100-day moving average, we believe that it is China driving the price of gold up. And we believe it is very logical. If China and the U.S. are going to have a face-off over trade policies, then China is going to continue to buy gold because if they buy gold, and that will show the U.S. that they mean business to get off of dollars, right? And if Trump uses tariffs to counter the policy with China, then China's already bought gold and they'll just buy more gold. So China's hedging the outcome of any discussion with the U.S. Trump is hedging it right now by saying the BRICS are in trouble, and he doesn't really have to hurt China. He wants to hurt the periphery, right? Like Canada and Mexico are our periphery, the BRICS are their periphery. If he can get control of those or weaken their resolve, then the BRICS are going to capitulate because China will capitulate. And Deutsche Bank asked what is driving trade wars. That's a really good piece we sent out. Market news, Trump effects. There's some more factual information. We're not going to go into that right now. Data on deck. It's a light week. Goldman's tariff take. Here's a summary of that report. Trump's comments on Canada and Mexico were much more hawkish than the president memo on trade. That's because he wants to win. So the memo was like, we want to win. He said, no, I really want to win. And that's why the dollar bounced. On China-focused tariffs, President Trump's comments carried a more benign tone than the memo released around the same time. As I said, he's got to get a couple wins under his belt before he goes after the big boss. On the universal tariff, Trump's comments and his memo on trade policy suggest action is not very likely in the near term. Universal tariffs are insane. I'm not saying they won't happen, but they're insane. Insanity might be what we need right now. Using gold and silver as examples, universal tariffs are effectively sanctions. Okay. I also have added some notes that I wrote. I put these on social media, but this is a retelling of what Besant said, and with me in all caps describing what the logic is. And the logic is simply this. If you can't compete in manufacturing by making stuff less expensive, then you make it less expensive by weakening your currency. There's the markets. I'm Vince. Have a great day.
Well, thanks for watching this morning's Markets and Metals with Vince Lanci. We sure appreciate you tuning in and starting your day with us here. Hope you enjoyed the show, and we'll see you again tomorrow. Please note that this video is not intended as legal licensed financial trading advice and is to be used for informational purposes only. Please contact your financial advisor before making any decisions, and thanks for watching.